All right. Hello, everyone. Travis here. And I know this is a little bit late since it's Thursday morning this week, but our normal market update got, the recording got screwed up mainly because I'm here in Asia and we just weren't on a suitable Wi-Fi connection. But I wanted to just do a kind of a midweek update here and go over some of the things that we went over on the Monday update to at least give you guys a little something to watch to kind of clue you into what's happening in the markets right now. So, last week the markets didn't do a whole lot. The S&P and NASDAQ and European indices were pretty flat, maybe slightly down in the US, but still really didn't move a whole lot. This week we've seen quite a bit of volatility. We look like we were going to potentially have a good, strong start to the week, and then we had some political events happen here in the U.S. And as you can see, that initially sent the stock index down significantly, but it's rallied since. So a lot of that has to do with potential impeachment proceedings against President Trump. A lot of people think that's probably not going to ultimately go anywhere. So that's why the markets have rallied back. But yeah, in any case, I'm not spending too much time worrying about the general market as a whole not taking any aggressive bets either way. I think right now there's lots of different signals on both sides. The week started with some pretty negative economic news coming out of the Eurozone and Germany, where we saw continued weakness in the manufacturing PMI data. As you can see here, it was a really low reading. Anything below 50 suggests contraction in the manufacturing sector, and it's been getting worse and worse in Germany. But this reading here in the past couple of days was particularly weak. It's the weakest it's been in a long time. So that was a concern. Same thing with the Eurozone-wide manufacturing PMIs. So manufacturing and exports as a whole just really showing weakness. A lot of that has to do with trade wars, uncertainty about Brexit, as well as the strength of the dollar, which has a lot to do with just interest rate differentials. The U.S. has the highest 10-year government interest rates pretty much across the world. So that is creating strength in the dollar as other investors start to bring money into the U.S. to try to get higher rates of return. In any case, all these things have put pressure on manufacturing in a lot of areas. So that is continuing to happen. And nonetheless, we're still close to all-time highs in the U.S. indexes. And some people are calling for a recession. Others think we might rip higher by 15 or 20%, given that the equity markets aren't that expensive on current earnings and interest rates are really low globally. So, the argument could be made that equities are underpriced relative to bonds. But again, I'm not making any aggressive bets either way on a market direction. I've still got a really solid amount of cash, just waiting for singular opportunities. And indeed, our watch list, we've seen definitely some stuff coming in. Prior to yesterday, Baidu had been selling off again and was making a steady march back below 100, and then got a nice 5% pop yesterday. So a little bit of recovery. There was some news there this morning. I noticed that. So here you can see. So Baidu owns a big stake in Ctrip. I think they own something like 20 or 30% of Ctrip. And Ctrip is a great company. It's also on our watch list. It's basically the Expedia or Booking of China. But oddly, Baidu's selling about a third of its holding in Ctrip. And Ctrip stock really hasn't been a high flyer lately. Ctrip has actually been pretty weak. Let's pull up the chart. So I'm surprised to see Baidu doing this here. And it could be that there's some conflicts of interest that are starting to pop up between Baidu and Ctrip. Maybe Baidu wants to, increasingly compete more against Ctrip, sort of like Google does. Google competes against some of its biggest travel advertisers because they have their own Google travel stuff they show, like flight search and stuff like that. So I don't know. Maybe Baidu is going to do something similar, and they're going to start divesting the Ctrip stake. Maybe Baidu wants the extra cash to, help fund some of the losses happening at iQIYI, which is their Netflix subsidiary. It's hard to say. I'll try to get more color on that, but I just thought it was interesting. They're not selling the whole stake, but Baidu's selling, I think, a third of their Ctrip stake. So kind of interesting. It'll raise about $1 billion for Baidu. and I think it was weighing on C-Trip a little bit this morning. But in any case, I had been watching Baidu. I had also been watching C-Trip as it gets down to, low 30s level. It starts to look pretty cheap. So, if we can buy this thing in the mid to low 20s, I think it's going to be a really interesting long-term play here on C-Trip as well. But I definitely need to figure out what's going on with the Baidu thing. So yeah, those were a couple I was looking at. There's on a watch list. I noticed Fiat Chrysler moving down with the auto sector. Again, I think this is probably due to a lot of the manufacturing worries. But the data on auto sales last month in the U.S. was actually pretty good. So I think it's auto sales outside the U.S. that a lot of people are worried about. But Fiat Chrysler makes most of its operating profit in the U.S. So it's interesting to see that. CTT, the special situation that we have in Portugal, that's been selling off. It had a nice rip over the last month, and then it just sold off dramatically. No news. It could be that the insiders are not as aggressively buying, or who knows. Maybe there was a dumb buyer, and now that buyer's gone. I don't know. I didn't see any company specific news, but I'm noticing that one was selling off a bit. And retail was kind of selling off again. I was looking at ANF was coming back down to earth. Still a really, really cheap stock. I think I had bought the starter position in the low 14s. So I may look to make that bigger if it gets back in the 14s again. It's still really, really cheap here. I think, even a case could be made that I should be making my position bigger at these prices, but just no reason for me to be super, super aggressive at the moment. And Mastercraft, similar deal. They had an investor day last week, and I had read through the transcript of the investor day, and it sounded like there were some positive things management had to say. They had given pretty weak guidance for the next year, but part of that's because they think the dealers that they sell their boats to are not going to carry as much inventory over the next year because the uncertainty over the general economy and the elections and things like that, which I think is rational. So it's not going to be great for Mastercraft. But they did, suggest that they're maybe going to initiate a stock buyback. They've been talking to their board about doing that. They've got a new boat line on the luxury high-end boat line that they're launching, and they're really excited about. So that I think could be really interesting. And the stock, trades for 6 or 7 times this year's earnings. Management expects only like a high single-digit decline in earnings next year, and then they think that the year after that they'll see a return to earnings growth. So if that were the case, or we even just got a really shallow recession, these prices even could be good prices to buy. So, it's worth keeping an eye on that stock too. Cars.com, another one that was coming back down to earth a bit. Let's look at a 1-month chart. So it had rallied quite a bit with a lot of the rotation out of tech and growth into value, and but then it's sold right back off over the last week or two. I'm just not crazy about their competitive positioning. I mean, they do actually have a strong competitive position relative to some of their competitors, but there's just too many competitors in their space right now, and I'd like to see some consolidation. So that's kind of what I'm waiting on there. Square was getting to a level that I thought was pretty interesting as it traded down to the low to mid 50s here over the past couple of weeks. And let's look at a 1-year chart. So I think it's helpful to see, this was a stock that, well, let's look at an even longer chart than that. This was a stock that, raced from $10 to $100 in like 2 years. And then, that was a little ridiculous. The valuation had gotten a little silly. And so it sold off, and it's down about 50% from its high last year. But, it's not a cheap stock even now, but they're growing at like 40+ percentage on a revenue basis. And so I think, too, they've got a lot of interesting opportunities still internationally. They just launched in Australia, and, I've been out in Asia, and there's like so much potential. I mean, we're just using cash everywhere out here still, and I just think it's insane. But potentially maybe they can make some inroads to SMBs in some of the Asian markets. And I think that could be a long-term, this company could grow for a long, long time if things go their way. So again, I think it could be interesting. Maybe time for me to look at maybe making a starter position, even though the valuation is out of my normal zone as a value investor. But I think as a longer term growth play, this is one that maybe I lock away in my long term tax advantaged accounts and don't look at for 5 or 10 years. Payments businesses, they become very, very profitable over long periods of time. So that's another thing to think about. What else? So the Zillow Group and Redfin have been selling off pretty aggressively. I think investors are worried about the competition in that industry now that Zillow and Opendoor and Redfin are all competing to buy and sell homes on demand. They call that the iBuying segment. So that's a big business model shift. I've talked about it before, but the stock's down quite a bit. When the old founder of Zillow came back to join as CEO and help drive this new iBuying business in the spring, the stock was up like I think 20% in one day, and then rallied almost to $50. And then now we're back, basically like 40% below that. So back down here to $30. So it's getting more reasonable. It's not cheap either yet, but it's if you assume that the iBuying business can be successful for them, it would definitely be undervalued on a long-term basis. So an interesting one also to watch. And other than that, nothing really. Micron reports earnings today after the market closes, so I'll be watching that. It really rallied over the last couple of months faster than I had hoped, and there was some improvement in the semiconductor sector, but I was noticing DRAM prices. If I click over here, chart of the DXI, which tracks a lot of the DRAM pricing, it hasn't, it had a big spike and then it's been selling off since. So I don't know. It'd be interesting to see what the forward guidance looks like for them, because maybe things aren't as rosy as the stock price suggests. But this was one I was hoping, I think it can be $100+ stock in a couple of years. I just was really hoping to be able to buy some at a silly price in like the 20s. I own a little bit that I bought in the low 30s, I think late last year, but didn't really get to make it as big of a position as I wanted. So I'll have to keep evaluating this one. It's pretty cyclical. It can go up and down pretty aggressively, pretty quickly. Let's look at a 5-year chart. I'll show you that. So yeah, this was at one point a single digit stock, rallied all the way to like $60 in 2 years, sold off, 50% in 6 months last year. And then, got another big rally off the bottom. So definitely one that can be volatile and offer opportunities for good dip buys, and a good trading stock if you know how to trade it. So that's another one. Let's go back to my notes here. Yeah, gold and silver we're still kind of keeping an eye on from a macro standpoint. The Fed, by the way, I should have mentioned this earlier. I was talking more macro stuff, but the Fed cut interest rates by 25 basis points as expected last week. But again, U.S. rates are still above most other countries in the world right now. So I think there are people that still want more cuts and think the U.S. will have to cut rates even more over the next year. We'll see. The Fed actually has some speeches this week. There's some Fed members that have some speeches, so the market will be watching that to see how the Fed is thinking about further rate cuts. But yeah, gold, silver, and Bitcoin had been trading kind of opposite to equities over the last couple of weeks, and seems to be the case again. It looked like gold and silver might start the week strong, but silver's selling off a little bit, gold selling off a little bit. Obviously, Bitcoin was selling off this week. So yeah, it's kind of just wait and see mode there. I don't have any particular insights to know where it's going, but definitely keeping an eye on it. We have some momentum traders in the group that I think had loaded up on some silver and gold plays. So watching those. And in terms of earnings, not a lot going on this week. I mentioned Micron today. We got Nike on Tuesday. A lot of people saw that. As a sign actually on the positive side of the global economy. Nike, their revenue growth was 7.2% for the most recent quarter. That was actually an acceleration from the prior quarter. And, pretty good forward guidance. So Nike, very, very large company that does, well, let's see, what do they do on a trailing 12-month basis? You know, 40 billion in revenues, huge company, right? 5-6 billion in EBITDA, and still growing nicely, still growing at you know, high single digit percentages consistently. So good to see. Good to see. You know, they're a pretty big global company. So often people look at them as a barometer of global economic health. But that's actually one data point that's on the positive side. Some of that's probably just Nike executing well and continuing to just run its brand well. But yeah, that was an interesting one. And other than that, not a whole lot going on the earnings side. Not a ton on the macro data. I mentioned the Fed speeches on Friday. You can see the calendar here on Koyfin. I filtered by high importance, and you know, not much else outside the U.S. There's some business confidence stuff in the Euro area, but on Friday tomorrow we do get durable goods orders and personal income and spending. So those are two widely watched reports that may have some market moving data. But outside of that, not a whole lot from a macro data standpoint. IPO markets are kind of interesting. They're perking back up a bit. The Datadog IPO last week, so Datadog does some really interesting stuff in the big data space, but it had priced above the, that's not a good chart. Let's try that. They had priced at the high end of the range, and then the stock had popped, I think something like, I want to say it was almost 100% off of where the IPO had priced on the first day. So it had a huge first day pop, but it's since gone to sell off. And again, this is why I always say don't buy these high flying tech IPOs on the first day of IPO, because you could probably buy them cheaper later. We've seen that with companies like Uber and Slack and now Datadog, Chewy, you know, all these companies that get obscene valuations at the IPO price. Slack's one that I've been watching because I think Slack is a really, really interesting business. And I think it's a really well-managed business. I like the management team a lot at Slack. The stock is down almost 50% from its first day of the IPO. And it's still just got a really, really high valuation. It trades still north of, I think, 10 or 15 times sales. I would love to buy Slack at under a $10 billion market cap, because I think it can be a $20 to $50 billion company, assuming they expand their product suite and continue to grow their customer base with their existing products. But, you know, let's just go ahead and pull up the financial data. It's about a $12 billion market cap today. You know, they're only doing, you know, they've done about 500 million of revenues in the past 12 months. Now on a forward basis, they're growing really, really fast. So they're growing like 80% year over year, I think. Let's check the quarterly. Okay, so they were growing 80% prior to the IPO. Now their revenue growth rate has decelerated to only 57%. So they're growing north of 50% year over year. And so that 500 million, they'll be at $1 billion of run rate revenue here in a few quarters. Let's just look at their estimates here. We'll look at analyst estimates of revenue. So like for this year, analysts expect about 600 million of revenue for the full year. Next year, about 850 million of revenue. Year after, about 1.16 billion. So yeah, you can see the revenue ramps up really quickly. And so on today's number, it looks like it trades north of 20 times sales, which is like a really, really ridiculous multiple. But you know, if you look 1 or 2 years out, it doesn't look quite as expensive because they're growing so fast, right? If we assume, you know, if we priced it on next year, or even like maybe a year and a half out revenue, let's say $1 billion of revenue, it'd be trading about 12 times EV to sales. So that would be at the high end of the SaaS sector, but you know, this one has the potential to have very high margins and sustain a high growth rate, good management team, et cetera. But again, I'm not going to pay at the high end of all the SaaS multiples, which are already high right now. I'd like to be able to buy this company at a sub $10 billion market cap level. It would still look expensive, but I think on a long-term basis, it could be a good risk reward, because again, I think this could be a pretty big winner on a long-term basis. It's just going to take a while. You know, they've got to grow for a number of years to really grow into that valuation. So anyway, it's one I'm watching. I may add it to the watch list at a certain point. But back to the IPO talk, Peloton actually looks like they're pricing their IPO today successfully. they're pricing at $29, which is at the high end of the range. We'll have to see where the shares trade after it actually prices and starts trading today. But that's a good sign, that the tech IPO pipeline is still chugging along. WeWork was the IPO that got pulled this week or last week. And obviously you probably read about that. The CEO actually got pushed out. Now that was just such a ridiculous corporate governance situation there. The CEO was fleecing the company of all kinds of money in different ways. And, they were flying around in a private jet, and he was kind of a wacky guy. And so there was a lot of stuff that investors were very concerned about. And so it's good to see they actually did pull the IPO, they pushed the CEO out. I don't know how they ever let him do that in the first place. That's definitely a concern of mine, and not really a business I care to be involved with. But maybe they'll try to bring that back public at some point in the next couple of months again. It'll be interesting to see what valuation. But I guess good that they pushed out the nefarious CEO. But other than a really ridiculous example like WeWork, the tech IPO market seems to be doing okay. So great. I would love to see more companies come public that we can trade. And that's really it on the market update this week. I know Nikki is still in her Domo swing trade. I don't think there's any updates really to her thesis there. I think she's still kind of waiting on price to give her some direction. But yeah, I think she obviously got involved down here somewhere. And I've called out, I think I showed on one of the previous updates, the spreadsheet that I looked at that kind of calls out the cash flow burn, which creates a risk of a potential need to either raise capital or face some kind of restructuring in about 2.5 years. So unless something meaningful really changes with their revenue growth rate or their margins. So I still have some concerns with this company on a longer term basis, but it's a low float, could definitely be a good swing trader. But from my philosophy and my investing standpoint, not one that I'm involved with. But we'll have to hear from Nikki how that trade's going. So that is Domo. I didn't have any trade updates this week. But it's been really hard for me here in Asia to follow the U.S. markets because they're a lot of the markets are open and trading when it's like early in the morning, like 2 a.m. here. So that's been hard for me. But I'm going to be back in the U.S. next week, so we'll probably return to the normal market update time again next week, and I'm going to have a lot more ability to be involved in the day-to-day of what's happening in U.S. and European markets. So that'll be nice. And hopefully that'll be a benefit for you all as well. So that's it from me. I hope that was helpful, everyone. And if you have anything you're watching or any questions, as always, hit me up in the channel and I will try to answer them if I'm not on a plane. So cheers, everyone. I hope you all have a great rest of the week and a great weekend. Take care.